This is for all my new investors or people that want to invest. This is for all my people who are trying to build a portfolio but just aren't sure where to start. Watch all the way to the end, because today we're going to be discussing index fund investing and everything that you need to know to make sure that you're on the right track. Of course, this is not financial advice, but it'll get you right where you need to be at. Index fund investing is just a form of passive investing based on the portfolio of the stocks that tracks the stocks index. So it'll be a bunch of stocks that are all together, and your portfolio will represent what those stocks represent. This makes it easier so that way you don't have to pick individual stocks, and it makes you gain exposure to the performance of specific markets. Because when the index moves, your portfolio is going to move with it. And again, this offers diversification across the market. But just be aware of which index fund you are trying to join, because they all carry their own risk tolerance. So just look around and consider what assets your fund will include. And just to give you an idea, most are broadly diversified across large cap stocks. Large cap meaning large capitalization, stocks that are doing very well for themselves. And then there's also index funds that include foreign stocks, of course, as well. You could also invest in bonds and also commodities like gold and things like that. But just do a little bit of research, of course. Make sure you have that correct risk tolerance, because you want one that's going to best suit your needs. It's going to depend on your age as well. Also, make sure you understand the fees that are associated with your index fund. Some of the fees are higher than others, so it just depends on which fund you're considering joining. For an example, some have management fees, and then others have front-end, back-end loads. So just make sure you know which structure is best for you, which fee structure, because some of them don't even have them at all. If you go to Robinhood, you can join an index fund, and Robinhood is for free. And just remember, you can't force any index fund to do whatever it's going to do. An index fund is only as good as its performance. And while history doesn't necessarily predict the future, make sure you do your research and understand how the index fund has done over time. And again, the past doesn't necessarily predict the future, but long-term performance can be a good indication of how the fund will do in the future of your portfolio. And you can get into multiple index funds. It doesn't just have to be limited into one. So it'll give you exposure to multiple markets. And while there are risks involved, understanding the fees associated with it, if any, understanding the asset allocation of your index fund, the performance of it, and all that can help you make a well-balanced decision that best suits your needs. Again, I always appreciate you guys for tuning in. If you have any questions, leave your comments down below or DM me on Instagram or anything like that. Don't hesitate to reach out. Here to help. Not financial advice. Go take advantage and go make some money.